quickly, let's go to radioactivetrading.com. I mentioned this before about the blueprint, the controlled risk, but one of the advantages here also, under the resources tab at radioactivetrading.com, is the trade simulator tool. What this tool allows you to do is put in your expected target price for your security, the loss limit you're willing to take, probability of loss. So if I'm looking at 83% probability, it might probably be a 17% loss. I'm going to start out with $10,000 account, and I'm going to allocate 33% to each trade. So let me put in 17.6% for that bull call debit spread that we saw. I'm going to keep my losses to 50% if the stock starts to move against me. So if my debit in that position was 185, I'm going to only allow it to be a 92-cent loss to liquidate the position. And remember, my probability of loss was we were at 83, so my probability of loss is only 17. Okay, so you start off with $10,000, 86% success rate over 100 trades. What just happened? Flips a coin. Heads, we win 17.6%. Tails, we lose 50%. We win 86% of the time. Random win-loss each time. Well, potentially over 100 trades, we could take that 10,000 up to 106,000 maximum with an ending amount of 102,849. Now, we had 10 wins in a row, so we never lost. We might lose in the beginning. Let's try to get when we lose in the beginning with the return we want. I'm sorry, the probability of success we want. Should have stayed with that one, but there we go. All right, so we've got one loss, but still the same ending amount. We're at 102,849 from $10,000 over 100 trades, 86% success rate, pretty on point. I'm closing the position if I hit 50% loss, and target return is 17.6%. 83% probability, 6 to 1, 7 to 1 risk reward ratio can be very beneficial. What were you looking at? What were we looking at? We were looking at a 72% win ratio, if I'm not mistaken. Loss limit, well, I know because we're using at-the-money debit spreads, even though they're farther out in time, I'm probably going to be taking, in market conditions like now, even in that first drop where I could have gotten maybe out with my in-the-money or safer bull call debit spread or out-of-the-money bull put, I could still get out with a 50% loss. You might be looking at 67, we're going to call it 68%. We'll go with the Armory Yager here. We're going with 68% loss limit, but you have a 49% probability of making 72%. You're going to close it earlier. We'll talk about that in a moment. But if I put in that 51% probability of loss, start with $10,000, okay, bankrupt after 41 trades. 50-50. Okay, at one point I got up to 18,956. Not bad. Okay, from $10,000. But ending amount, wins and losses, there it goes. Okay, 57% win ratio. Instead of being probability of 49% success rate, we exceeded that. We get up to 34,000. At one point, we're 354,000. But ending amount, you're only at $34,000. The in-the-money, safer debit spreads ratio, no guarantee of future performance, we were looking at 102,000. Okay? 49.50, 809, almost bankrupt. Took it up to about $19,000. Not bad, but did you get out in time or keep going? You kept going. Because it was a winning record, and you end up getting behind the 8-ball. Now, we're going to close our positions for 50% of the maximum expected wins. We're only going to target 36%. The loss limit, because we're using the at or out of the money when the market still moves against us, is still probably going to be 68%. We might not likely be able to close it for 50%. We might be able to, but probably not, depending on volatility of the market. Now let's say that we reduce the probability of loss. We're not even going to be able to cut it in half, but let's say we come close. Let's say we cut it down to a 28% potential loss, 72% win rate, making 36% when we're right. Let's give a little bit of benefit here. Let's give you down to 58% loss. All right, so 72% win rate, right on point, 36% win ratio, 36% return on your debit spread. You get it 72% of the time. You keep your losses controlled to 58. After 100 trades, you make 84,000. Still below the 102,849 that we had with that higher risk-reward ratio with the higher probability. Run it again. It was 72, 74 there. Okay, now you got me. You were right 74% of the time. Okay. I had an 86% win ratio, targeting roughly about an 83, about an 86% win ratio. You're looking at 72% win ratio. You exceeded a 74. You only have a small drawdown. You have a higher return. But you see how you're not targeting this, but you're closing these at 50%, but you're not getting to 90% win rate. That's not happening. But yes, this one here shows better performance after 100 trades. But again, that's assuming you control the risk to this level. That's assuming that you're right 74% of the time with a 49% probability. I changed the numbers to give you a little bit more success rate because you're cutting the positions off with half the profit instead of expecting it. Not all of them are going to hit that. That's the problem. Not all of them are going to see a 50% ratio really soon. Plus, the benefit of these at or out of the money far-term debit spreads, of course, is the fact that you have the time on your side, which means you also need time value decay to get to this 50% win ratio, or a good move in the security to get that 50% of the maximum target you were expecting. But it takes more time than opposed to a 12, 14, 7-day out trade with an 85% probability and a 17.6% return. But again, it's a possibility. No guarantee that closing them early is going to drastically reduce your probability or your win ratio from around 50% up to 72%. There's no guarantee of that, but you can see there. But we saw how just targeting the higher return with a lower cost, with the expected probability, didn't pan out, as well as looking for what you might consider to be a worst risk-reward ratio, 6.5 to 1, 7 to 1 risk-reward ratio over time, with a higher probability of success rate, even though we're targeting a smaller return, as opposed to looking for the positions that have the 1-to-1 risk-reward ratio and only a 45, 50, or 55% return. That's what I was trying to illustrate, and I think I illustrated that okay. Using that trade simulator tool, again, go to radioactivetrading.com, click on resources, and then click on trade simulator, and you can run your numbers, whether it's for covered calls, cash secured naked puts, things that are comparing probabilities, win-loss ratios versus return, loss limits, and so forth. Check your numbers, see what your trading strategy is giving you, and if it's meeting your goals for the position, for your portfolio, and for your trading plan long term.